It's Thursday, and we're in the thick of earnings season. We're seeing the major U.S. stock averages trade on both sides of flat. So here to weigh in on the action is Alan Valdes of Silver Bear Capital. Good afternoon. Thanks for joining me.
Thanks for having me, Remy.
Well, we're here on this Thursday afternoon. We're digesting earnings. We got a mixed batch of economic data releases, and we still have that U.S. GDP figure coming out tomorrow. But given that today is the busiest day in the earnings season, what do you get from today's reports?
A headache. I'll tell you, because it's such a mixed bag. I mean, we had good earnings from, say, Dow Chemical. We had good earnings from some other stocks there. We had bad earnings from Ford. So it's all over the map with the earnings. Housing numbers were a little better than expected. But like you said, the big number is tomorrow's GDP. I mean, they're saying, right now we have like 1% growth, a little over 1%. But they're saying maybe 2%, 2.5% to 3% GDP growth, which would really move the needle. And you'd probably see the Feds raise rate. Right now, there's a 74% chance that they raise rates in December. I think they should. I mean, here's your opportunity. If they don't do it now, they're not going to do it. But overall, it's very convoluted out there. But I'll tell you one thing, why they may pause in raising the rates is that consumer confidence number that came out Tuesday, 2 days ago, was horrible. And this is in October with November, December, right around the bend, the biggest months in shopping. This country, powered by consumer spending, 75% of the economy is powered by the consumer. If they slow down, could be a bad sign for the economy.
And after that GDP number, we have several central bank rate decisions next week alongside meetings. But we have to keep in mind that there's the election that we have to get through as well before that December meeting. And given that we've been getting a mixed batch of global economic data, what's your key takeaway?
Well, I think you see economies doing a little better. I mean, look at Deutsche Bank's numbers this morning. They were much better than expected. You saw good GDP out of Europe. So I think overall, you're seeing slow, fragile growth right now. And if that continues, I think you'll see the Feds raise rate. And like I said, here's their opportunity to raise rates. If they don't do it now, I think you could be in for a bad time ahead, just in case you got a bad November and December with the consumer. So they should do it now, play it safe, and move on.
Well, keyword there, Alan, you mentioned opportunity, and I think a lot of investors may be watching out for some opportunity given that we have a lot of event risk coming out. What do you make of the latest earnings we got out from the tech sector? Do you see any opportunities?
Yeah, I do. I mean, people are bashing Apple all over the place, for instance. Meanwhile, Apple has more cash in their reserve. They could buy every NFL team and have money left over. That's how much money they have on hand with cash. I don't discount Apple, especially with Samsung having all their troubles. I think you'll see great numbers in Apple next quarter, especially the iPhones and the iPads and the Pros and things like that. And I think Apple is not going to go away anytime soon, and you'll see a good quarter next quarter.